Welcome, guys. In this video, I'm going to break down EURUSD, where I took a short trade. But the main focus of this video will not be on the trade breakdown, but just simply sparing awareness on how important it is to actually choose a reliable broker or a reliable platform and not to buy all the Instagram ad platform accounts that you see being advertised like buy one challenge and you will get 53 challenges for free only for $2. Forget about these prop firms. You will lose your money. Even if it's $10, even if it's $50 for a challenge, you will lose that money. You can actually open a demo account and you get better results by opening a demo account on FTMO than wasting your money, your hard-earned money on these prop firms. So, first of all, before I go into this topic, most likely I'm going to upload this video to the educational videos topic section and not to the recap section. But first of all, I'm going to break down the trade. So EURUSD, what we have here is that I'm just going to quickly break it down. Previous week, we were looking for a trade from this high point down to this low point. We put the Fibonacci range and we were looking for the reconfirmation of this 71 level. So what took place here is that price, first of all, rejected on the 71 level, and then it shifted the structure, created a huge accumulation range in this region, and then swept out the top of the accumulation first, then went for the bottom of the accumulation sweep second. You can see that the highest point of this overall accumulation range is swept out. Price collected all the liquidity from this previous high point. This high point was also an Asian high point. So price just wiped every existing liquidity out, from where it aggressively reversed to the downside, and eventually it shifted the market structure right around this line. Why this is a market structure shift? Because price did push and did create a new high point starting from this low point, but this is the external shifting structure, market structure shift point, and we can find another above it, which is the internal market structure shift point. This is the low point that actually did put the highest high into the market and swept out the previous existing liquidity from this accumulation range. All right, what else we can see right here, that after the sweep of this liquidity, price created a little bit of pullback, but from this order block right here, a really huge volume gap candle and continuous volume gap candles formed, which eventually led to a market structure shift right here. So with this being said, we could pull a Fibonacci from high down to the low point because we had all the criteria system fulfilled. We had a 71 level mitigation, we had a sweep of liquidity, a market structure shift, a volume gap, an order block, and we could pull a Fibonacci as well. Once price started to get close to the 71 level, it started to drop down and, hesitate a little bit. So it built up a little bit of liquidity, a little bit of inducement for the entry. So we can almost take it out as +1 and criteria for the entry. Okay, so the tech has happened. There was a little bit of craziness going around the tag because yeah, this tag has happened before Friday's market closure. So I forget to delete all my limit orders, and when I remembered that I had to delete my limit orders, actually this trade tagged me in. Friday's market closure in my time zone is at 11 p.m. and I was in the bar drinking with some of my friends, having stories, having a good time. And then I remembered 10 p.m. 10:55 p.m. I remembered that shit, I have to delete my limit orders. As soon as I checked the charts, I saw that EURUSD tagged me in because yeah, obviously I did set the limit a few hours ahead of this overall trade ideas form. So when I actually checked my charts, checked my metaphor to delete the limit order, I was already tagged in the trade. So I was like, yeah, we will see what will happen. What happened is that on Monday, price action at this region froze. I was sitting there watching my charts, watching my phone, watching TradingView, watching everything, and expecting for a really great market open drop with high hopes. But what I saw on TradingView wasn't this, because this is not the chart I'm usually trading. This is capital.com. You can see it in the top left corner. This is capital.com. This is not the chart I'm usually trading. And this is not the chart that I'm trading right now. But on this chart, the manipulation is not visible. Because if I go over to my original chart right here, you will see that this is what I saw when I first opened the charts on Sunday's market open. And I saw that, yeah, price just gave me out straight up stop loss. I was like, yeah, my metaphor was froze. Actually, the day that did not load at that time, Market was open, but the data wasn't released, so I couldn't see what is going on at my broker. But when the data got loaded, what I saw on my chart was, let me just show you exactly was, sorry, let me just pause the video and find the metaphor picture for you. So what I saw at that region was exactly this one. So when my broker, which is well-known IC Markets row spread account, when IC Markets loaded the charts, I saw that this movement has never happened in reality at a reliable broker. So this was IC Markets, was never above the previous high point, was never reached the stop loss, was never creating these fake candles. It was straight up, just opening right here, going up, dropping down, and then going into the original expected direction. However, at some brokers, like for example at that chart, or at some prop firms, or some data providers, or some liquidity providers, this wasn't the case. This wasn't the, let me just go back. This wasn't the case. People could not see this movement. People saw the sweeping movement. And if I link some pictures for you, you will see that, for example, here's an example for this. FundedNext, a prop firm, a really huge prop firm, had this data showing. It showed the exact same data on Metaphor at a liquidity provider as it was shown on the previous EURUSD chart. It wigged above, and it not just wigged above, on charts, on paper, it actually wigged above in reality as well. So they did a manipulation. But here's another example for this, which will be funding pips. Funding pips, also really huge, really, really reliable. I don't know why it's not copy and pasting my picture. Let me just go back and try it again. Okay, funding pips. Also a really huge prop firm. On funding pips, once again, the chart is completely different. You know, this is once again a completely different candle. It went way above the previous high point than, for example, some of the other liquidity providers and data providers are showing. What this is a pure manipulation. And here's another example, which will be a counterexample because this will be FTMO. What do we know about FTMO? FTMO is a really reliable, not just a really reliable, but the most reliable prop firm out there. What you see on FTMO is exactly what you see at IC Markets. Why? Because they have an A-book broker data, A-book broker liquidity provider. So they cannot manipulate price. They cannot change the white label. They cannot manipulate price action to their favor to sweep out their traders. They have to be up to date with the data they are providing and the data that is coming in from the broker. So yeah, at FTMO, there was no manipulation. At IC Markets, there was no manipulation. Simply, they cannot afford to manipulate price action because they have way too huge and high reputation to ruin that reputation for some collected liquidity from this manipulation. Other B-book brokers, B-book liquidity providers, prop firms did manipulate the charts, however, like I showed you previous on funding pips, right? Funding pips did manipulate the charts. And this is, ladies and gentlemen, why you should choose a really reliable broker and prop firm, and you shouldn't always go for the cheapest option. Why? This is the reason. FTMO. FTMO is the, yeah, I can confidently say that FTMO is the most expensive prop firm out there, but for a reason. Because FTMO will not manipulate the charts, will not sweep you out, will not determine your account, will not delete your account for copy trading, will not delete your account for false accusations. They will always be reliable. They have a broker-backed platform. They have their own broker, not just copying the data from another liquidity provider or broker, but they have their own broker. Yeah, they are expensive, but you are paying these premium prices for protection, for reliability. Because yes, they are expensive, but they will pay you out. They won't delete the account for false accusations, for copy trading, for false copy trading, for every single shit that they come up with. No, they won't do this. They are paying you out and they are being reliable for a price. Yeah, their accounts, I don't know, 10K account is like $150. I don't know the exact prices. At other firms, you get a $10,000 account for $20, $30, and you get three of these for $30. Yeah, they are cheap. They are really cheap. and you are being happy with, yeah, I found a really nice prop firm. I bought it for $30 for a 10K challenge. What a legend. You pass the challenge. Let's just say you pass the challenge. They will never pay you out. They are not reliable. You just wasted $30. So what I suggest you to do is to trade with FTMO or other reliable firms because there are few, really few firms that are reliable. FTMO is one of them. I wouldn't say that Funding Pips is one of them. Funding Pips, yeah, really ruined their reputation in the past few months. But yeah, once again, and this is why you should find a reliable broker as well. Because yeah, IC markets might cost some money for a spread for if you are not trading a raw account. They have huge high spreads if you are not trading a raw account. Yeah, if you are trading a raw account, you are paying the price for not having high spreads. You are paying the price for having zero spreads. You are paying actually, if I remember well, $7 per opened lot, and you are paying for weekend swaps, for overnight swaps. You are paying lots of commissions to IC markets if you are trading with them. What you get is reliability, because you will always be tagged. If price perfectly reaches the 71 level limit order, it will be tagged on Metafor at IC markets. They won't manipulate price action. They won't manipulate you out of your positions. You are paying the price for reliability. And this is the moral of this video. Once again, this trade, yeah, unfortunately, or not unfortunately, but accidentally, I opened this trade because I forgot to delete my limit order. But in the end result, it did run down to actually like 1 to 7 restore ratio. And I didn't even close it out there because price action was just happening way too fast. And when I checked the charts around 8 a.m., it was right here. Then it started to drop these huge candles and more huge candles. And by the time I actually realized that I have to close my trade, it was running somewhere around here in like 12K profit. So I just quickly closed out $6,000, and then I did let the rest run, and I closed it out today for another 5K or 5.5K, somewhere around here. Yeah. So, but the position, the overall trade is not the moral of the story, because yeah, in general, this is a textbook trade. Sweep of a previous 15-minute swing high point, market structure shift order block, blah 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 blah. Everything is there, right? Perfect. The moral of this overall video, I mean, the overall moral of this video, sorry, I'm really tired, is to show you guys that why you should be using reliable prop firms and brokerages. Because once again, yeah, you are paying the price, you are paying premium prices, but you are paying that premium price for reliability. And reliability is the most important thing when you are trading with a broker or a prop firm. Because if they are reliable, if you trust them with your money as well, you know that they will pay you out. So yeah, guys, please, please choose reliable prop firms. Because, for example, this is what has happened with our co-coach, Mohamed. Mohamed opened the same trade. He was on the trade as well, but he was trading at some B-book prop firm, not really well-known prop firm. He got manipulated, he got swept out. On the other hand, I was kept in the trade and I made $12,000 by choosing the right broker. And yeah, once again, this trade might costed me some money. Like if I actually calculate it, it was around $200 to open this position. $200 just to open a position. Even if it was break even, stop loss, doesn't matter. $200 base fee to open this position. But by choosing the right broker, IC Markets, I actually booked 12K. If I would have chosen another broker, it might have spreaded me out. I would have not paid commission. I would have not paid that $200, but I would have paid the stop loss. I would have lost the money on the stop loss, and I would have not made $12,000 by just choosing the right broker. So please, guys, do your research and choose reliable brokers and prop firms, and do not go for the cheapest option. Take care and goodbye.